whenever the transaction that occurs in an organization, so it will be immediately recorded in the books of accounts. Here each and every person will have their own need to know the financial information about the organization. The main purpose of management accounting is to present the accounting information in such a way as to assist that management in planning and controlling the operations of the business. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, we were discussing about Chapter 1, that is your Accountancy, Part 8, Chapter 1, Introduction to Accounting. So I have already told you, so we will be having two textbooks, one is Part A as well as Part B. Under Part A, we are going to discuss Chapter 1, Introduction to Accounting. So we had already discussed few concepts in our first session and today we are in the second session. Let us quickly recall what we have discussed in our previous session. So in a previous session, I have covered this topic. So the first topic was Introduction to Accounting. So we have discussed in detail, so how this accounting has been introduced, then who have used or who have first introduced this accounting. So he is popularly known as father of accounting. So who is that person? Luca Pacioli. Now who is the father of accounting? Luca Pacioli. So Luca Pacioli is popularly known as father of accounting because whatever the system of accounting what we are using today, so it was introduced by whom? Luca Pacioli in the beginning days itself. So he is popularly known as father of accounting. Next we have learnt definition of accounting, that is according to American Institute of Certified Public Accountant. So we had learned one of the important definition which is given by AICPA. So what is this AICPA? American Institute of Certified Public Accountant. So how they have defined accounting? Accounting is an art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. I have told you this is one of the important definition which is given by American Institute of Certified Public Accountant and you have to learn this definition of accounting. Next, we have learned different characteristics of accounting. So there are number of characteristics of accounting and we have discussed in our previous session. Next, objectives of accounting. So there are also several objectives of accounting which we have discussed in our previous session. So these are the few topics what we have discussed in our first session. Moving on to today's session. So first we shall learn about bookkeeping. So I have already told you in the previous session, bookkeeping is the beginning of accounting. So accounting starts where bookkeeping ends. So where the bookkeeping ends, from there the accounting starts. Now let us see what does this bookkeeping is all about. So according to R.N. Cartier, let us see a definition here. According to R.N. Cartier, bookkeeping is a science and art. So it is called as what? Science and art of recording correctly in the books of account all those business transactions. Now, what you have to remember, bookkeeping is a science as well as art, where we are going to record all the transactions in the books of account of only business transactions. So that transaction should belong to that particular business itself that result in the transfer of money or money's worth. Now, what you have to remember, bookkeeping is an art as well as science where we are going to record the business transaction which can be measured in terms of money or money's worth. So that procedure or that process is called as what? Bookkeeping. The maintenance of books of accounts include the following 4 activities. Let us say what are the activities which are included in the process of this bookkeeping. So the first one is Identifying the transactions. Of course, in accounting also, we have to identify the transactions. I have already told you, there are number of transactions which takes place in an organization. So, we are not going to record all the transactions. First, we have to identify which of the transactions that has to be recorded in the books of account. Here also, in bookkeeping, identify the transactions of financial nature. So, we have to identify only the transactions of financial nature from amongst most of the transactions. So, among various transactions, we have to identify only the transactions of financial nature. So, this is the first activity, that is identifying the transaction which is of only financial nature. Next is measuring. So, of course, we have to measure those transactions in terms of what? In terms of money. So, here measuring will be done in monetary terms or monetary units. So, it should be measured in terms of money. Measuring the identifying transaction in terms of money. First, we'll identify the transactions. Next, we have to see whether that transaction is measured in terms of money or not. Next is recording the identified transactions in the books of original entry. Next, what we will do, we will record that identified transaction that can be measured in terms of money. So, we will record that transaction. Where we have to record that transaction? In the book of original entry. So, which is a book of original entry? Journal. So, journal is called as book of original entry. So, we will record that identified transactions where in the book of original entry, which is called as journal. Next, fourth step is that classifying them into ledger. So, we have identified the transaction and we have checked whether it is measured in terms of money. Next, we have recorded the transactions in journal. Now, that classify or here in journal, we will record all the transactions. That is only the transactions that can be measured in terms of money. Now, we have recorded all the transactions. Next process is that we have to classify the transactions. So, I have already told you in the previous session. So, classification of transaction is nothing but segregating the transaction depending upon their type. That is known as what? Classifying the transaction. So, here the first step is that classifying them into ledger. So, how to classify? The bookkeeping function is routine and clerical in nature. So, here bookkeeping function is routine and clerical in nature. Why it is called as routine? Because whenever the transaction that occurs in an organization, so it will be immediately recorded in the books of accounts. That is, the transactions of monetary nature will be immediately recorded in the books of account. So, it is called as routine and clerical in nature and can be performed by persons having limited knowledge of accounting. So, here the knowledge of accounting is very less here. So, in order to maintain a bookkeeping or the person who maintains this bookkeeping, he should not have or he may not have sufficient amount of knowledge regarding this accounting because he is just going to record the transaction in a particular book. So, here a normal person. So, this can be performed by person having limited knowledge of accounting. So, he will not be a qualified person. So, he will have a limited knowledge of accounting. At present, this function is increasingly done by the computers. Now, as the technology has improved, so this bookkeeping is normally done by the computers in these days. So, what you have to remember in bookkeeping? So, it is a system where all the transactions, all the business transactions which is measured in terms of money will be recorded in a particular book. This process is called as bookkeeping. So, first we will identify the transactions which has to be recorded. Next, we will see that whether the transaction is measured in terms of money. Next, we will record that transactions in a book of original entry which is called as journal. The last step is that we will classify that transactions into ledger accounts. In the sense, depending upon their nature, we will segregate those transactions. So, this is about bookkeeping. Hope you have understood this topic. Now, moving on to the next concept, accounting. Let us see what is this accounting is all about. So, we have already discussed the definition of accounting. Let us see what is this accounting. So, accounting starts where bookkeeping ends. So, I have already told you accounting means what? Where the bookkeeping ends, from there the accounting starts. So, it is a continuation in accounting. It includes the following activities. Let us see what are the activities which are included in this accounting. So, bookkeeping ends at classifying of the transaction. Let us see after that what we have to do, because it is a continuation of bookkeeping. So, the first activity is that summarizing the classified transaction in the form of profit and loss account and balance sheet. Of course, the last stage of bookkeeping is what? It is classifying. Classifying into ledger accounts. After classification, we will summarize. So, what do you mean by summarize? So, whatever the classified accounts are there, so we have to present to the users. So that is known as what? Summarizing. Now, how that whole account will be presented to the users? That is in the form of profit and loss account as well as balance sheet. So it's not just that we have classified the transaction and it will be remained in the organization. So it has to be presented to the users. So how to present that accounting information? In the form of profit and loss account, which will tell us whether the organization is in profit or loss, and the same way we will prepare the balance sheet. So why balance sheet is prepared? In order to know the financial position of the business. Next is, so we have summarized the transaction. So we have made it ready how it has to be presented to the users. Next is analyzing and interpreting the summarized result, in other words, drawing the meaningful information from profit and loss account and balance sheet. Now, what do you mean by summarizing? So, we have presented, so we have kept ready how the accounting information has to be presented. The summarizing in the sense, after seeing that accounting information, what we have presented, so the user should be able to get the specific information from that. So, it should be in such a way that the user should gain some information from that presented accounting information. So, that is known as what? Summarizing. So, we will present the accounting information in the form of profit and loss account as well as balance sheet, right? So, after presenting the information, the user should be able to draw conclusion, that is, he should be able to analyze the meaningful information from that profit and loss account as well as balance sheet. So, this is nothing but summarizing. Next is, so as I told you, it should be able to give them meaningful information. Now, we are done with this. Now, we have to communicate to the users. So, we have to communicate that accounting information what we have presented in the form of profit and loss account as well as balance sheet. It has to be communicated to the users. So, as I have already told you in a previous session, there are two types of users, internal users as well as external users. Internal users are those users of accounting information who are inside the organization, whereas external users are those users who are outside the organization, who is eagerly waiting for the accounting information. So, the last stage is that we have to communicate that information to the interested parties. So, here interested parties is nothing but what? Users of accounting information. So, it can be either internal users or external users. Thus, an accountant goes beyond that of bookkeeper. So, one who maintains that bookkeeping is called as bookkeeper, and the person who maintains this accounting is called as accountant. Now, here the task of accountant is more than that of bookkeeper. Here, I have already told you the knowledge which is required in order to maintain a books of account by a bookkeeper is very less when compared to accountant. Accountant should have sufficient knowledge of this accounting information or accounting principles as well as standards. So, this is about accounting. So, here what you have to remember, accounting starts where bookkeeping ends. So, bookkeeping ends at classifying the transaction. After that, accounting starts with summarizing, analyzing and interpretation and communication of information to the useful users. That is about accounting. Next, however, in actual practice, the accounting process includes bookkeeping function also, because on the basis of bookkeeping records, an accountant draws up periodically such financial statement as a profit and loss account as well as balance sheet. So this I have already told you. So accounting starts where bookkeeping ends. So in bookkeeping, we will classify the transaction. Using that classified transaction, we will prepare profit and loss account as well as balance sheet. That is, accounting starts from where? From summarizing of the business transaction. So here, the accounting information will be presented in the form of profit and loss account and balance sheet. In a small concern, the accounting performs or accountant performs the work of a bookkeeper also. Now here, if you compare a small organization, so in a large organization, there will be a bookkeeper. At the same time, there will be an accountant separately, because the number of transaction is very huge. But in case of small organization where there is limited number of transaction, in such cases, accountant will act as both accountant as well as a bookkeeper. Here, both the task will be done by a single person who is accountant of an organization, that is a small organization. Now coming to accountancy. So this is your subject. Let us see what is this accountancy. So you have to know the meaning of accountancy because it is a subject for you. So you have to know the meaning of this accountancy. Now let us see what is this accountancy is all about. So I have already told you in a previous session, bookkeeping is a different concept, accounting is a different concept. At the same time, accountancy is also a different concept. Now let us see what is this accountancy. So it refers to a systematic knowledge of accounting concerned with the principles and techniques which are applied in accounting. Now what does accounting is all about? So it is also a body of knowledge. So it contains number of information. So what type of information? It contains the accounting principles as well as techniques which are used in accounting. So during the process of accounting, so what are the principles and techniques to be followed? So that we will learn in this accounting concept or accountancy concept. So accountancy is nothing but it is a body of knowledge which contains all the information relating to accounting principles as well as techniques that will be followed in the process of accounting. So during the process of accounting, so now we know what is the meaning of accounting. So we have already discussed about it. So during the process of accounting, what are the principles and techniques to be followed that we will learn in accountancy. So it tells us how to prepare the books of accounts. So first it tells us how to prepare the books of accounts, how to summarize the accounting information, in the sense how we have to present that accounting information, and how to communicate. So how to communicate to the interested users of accounting information. So this all will be learnt in accountancy. According to Kohler, let us see a definition which is given by Kohler. Accountancy refers to the entire body of theory and practice of accounting. So it overall contains the theory and practice of accounting. Now what do you mean by bookkeeping? Bookkeeping is just maintaining a book in order to record the transaction. Record the transaction and classify the transaction. After that, accounting starts. So accounting starts from summarizing, analyzing and interpretation of transactions and communicating the accounting information to the users. Then what is this accountancy? Accountancy teaches us all the accounting principles and techniques to be followed in the process of accounting. So it is a theory subject, or we are going to learn all the details or theory aspects of accounting. So here it overall contains the theory as well as practice of accounting. So that is known as what? Accountancy. Hope you are clear with all the three terms. we shall see few of the terms that are used in accounting. So here, if you go through this, accounting can therefore defined as a process of identifying, that is, so it is a process of identifying. I have already told you accounting starts with identifying of the transactions. So it's nothing but there are number of transactions that takes place in an organization. So we have to identify which transaction that has to be recorded in the books of accounts. So it starts with identifying. Next, measuring. Of course, we know. So here the transaction should be measured in terms of what? In terms of money. Next, recording. So recording the transaction in where? In the book of original entry, which is called as journal. And communicating. So after recording the transaction, we will classify the transaction, we will summarize the transaction, we will analyze and interpret the transaction. So overall, that accounting information should be communicated to the users. Communicating the required information relating to the economic events. So what do you mean by economic events? So these are the transactions which takes place in terms of money. So there are number of transactions that takes place in an organization, but all the transactions are not measured in terms of money and which will affect the business. So here economic events in the sense those transactions that takes place in an organization that can be measured in terms of money and it will affect the business. So that events will be taken. So here required information relating to the economic events of an organization to the interested users of such information. So interested users I have already told you, external users as well as internal users. In order to appreciate the exact nature of accounting, we must understand the following relevant aspect of this definition. Let us see, in order to know the actual meaning of this definition, let us see few of the terms, few of the important terms here. So the first one is economic events. I have already told you, for example, employee has been resigned in an organization. So an efficient employee has been resigned from the organization. Of course, it will affect the profitability of the business. But the resignation of an employee is not measured in terms of money, right? So such type of transactions are not recorded in the books of accounts. For example, purchased goods worth rupees 10,000. So it will be recorded because it will also affect the profitability of the business. At the same time, it is measured in terms of money. Whereas I have already told you resignation of an employee. Of course, it affects the profitability of the business, but it is not measured in terms of money. So if the transactions are not measured in terms of money, then we are not going to take that transaction. So economic events in the sense it will affect the profitability of the organization. At the same time, that transaction should be measured in terms of money. Only such type of transactions will be treated as economic events. So in accounting, we will take such type of economic events. Next, identification. Of course, I have told you in a particular day. So if you think about a particular day itself. So in a particular day, there are number of transactions that have been taken place in an organization. So we are not going to record all the transactions that have taken place in an organization. We will take only those transactions which belong to that particular business and which can be measured in terms of money. Only that transaction has to be identified and that has to be recorded in the books of accounts. Identification. Next, measurement. Of course, we have to measure all that transaction in terms of money. That is in terms of rupees or in terms of paise. So here it should be measured in terms of rupees or in paise, or we can overall call it as, so that transaction should be measured in terms of monetary units. Next, recording. Of course, we will record that transaction in the book of original entry, which is called as journal. So we have to record that transactions in journal. And communication. So after recording the transaction, simultaneously we will classify the transaction, will summarize, analyze and interpret the transaction. So I have already discussed about all these terms. Next, so an overall picture of accounting information is being prepared by us. Now we have to communicate that information to the user. So we have to communicate. Next term is that organization. Now, what do you mean by an organization? So, organization is nothing but a business organization where the main aim is to earn profit. So, here organization can be either not-for-profit organization or profit organization. So, both are called as what? Organizations. So, it may be their main aim may be to earn profit, or their main aim may be in order to render service to the society. So both type of organization are also called as what? Or both type of business are also called as what? Organizations. So here organizations can be either profit organization or not-for-profit organization. Next, interested users of information. Of course, I have told you the communication. So here the accounting information has to be communicated to the interested users of accounting information. Let us quickly see who are these interested users of information. So accounting is a means by which necessary financial information about business enterprise is communicated and is called as language of business. So, accounting is called as what? Accounting is called as language of business. Why it is called as a language of business? Because once we will prepare that accounting result, so we have to communicate to the interested users of accounting information. So there are number of persons who are eagerly waiting to know the result of a particular organization, that is accounting result of a particular organization. Then it is a business duty to communicate that information to the interested users. So accounting is called as what? It is called as language of business. So accounting is called as what? Language of business. So many users need financial information. So here, depending upon their need, so the need of financial information will be different from one user to another user. So depending upon their need, sufficient accounting information has to be provided by the organization. So here, many users need financial information in order to make the important decisions. For example, take about investor itself. So he has invested certain amount of money in the organization. Now he needs the accounting information. So he has to know that whether his investment is profitable or not, or whether he has to make further investment in that particular organization or not. So for that reason, here I have just taken the example of an investor. In the same way, take about the proprietor of the organization. Of course, he also should know the accounting results. So he has to know whether his business is in profit or not, whether he is able to fulfill the demands of shareholders or not. So in order to know that, so here each and every person will have their own need to know the financial information about the organization. So there are many users need financial information in order to make the right decisions. So these users is divided into two broad categories. Let us see. I have told you here the users is broadly classified into two types: internal users and external users. Now I have already discussed about internal users, at the same time external users. Now who are the internal users? So these are the users of accounting information who are inside the organization. Who are inside the organization and directly linked with the organization are called as what? Internal users. Then who is external users? Who is outside the organization. So they are also directly linked with the organization, but they are outside the organization. So these are the two main types of users of accounting information: internal users and external users. Now let us see what are the examples for internal users, and this is a very important 2 marks question where they will ask write any two internal users of accounting information, or they may ask write any two external users of accounting information. So you can write any of the two, but before that you have to understand who are the internal users. So these are the users of accounting information who are inside the organization, and at the same time external users. So these are the users of accounting information who are outside the organization. Now if you see the examples here, chief executive, of course he will be inside the organization, so internal users. Financial officers, Vice President, Business Unit Manager. So here also you can give lot of examples. For example, Store Manager or Purchase Manager, Sales Manager, Human Resource Manager, Financial Officer. So you can give on or you can go on writing the examples for this internal users. Plant Manager, Store Managers, Line Supervisors, etc. So these are the certain best examples for internal users who are inside the organization. Next, external users. So let us see who are the external users here. Present and potential investors. Of course, investors are also the users of accounting information. So they are external users. Creditors. So creditors is nothing but the bank or financial institution which have provided loan to the organization. Of course, they are the external users. So they also want to know the financial information about the organization because the organization have borrowed loan from this financial institution as well as bank. Now the bank and financial institution should know what is the financial position because in order to see through that whether the business is able to repay that loan or not. So in order to know that, they are also eagerly waiting for the accounting information. Next, debenture holders and other lenders, tax authorities, regulatory agencies, that is Department of Company Affairs, Registrar of Companies, Securities Exchange Board of India, that is SEBI. Next, labor unions, trade associations, stock exchange and customers, etc. So these are the few examples for external users of accounting information. Now let us see what are the branches of accounting. So here I have told you, so accounting is not only confined for recording of business transaction, so it is more than that. Here the scope of accounting is more or much larger than normal accounting, that is just recording the transaction in the books of accounts. So it is much more than that. Let us see what are the branches of accounting here. So the first one is what? Financial accounting. So you know about financial accounting. So here we will record the transaction, we will classify the transaction, we will summarize, analyze and interpret the transaction and we will communicate to the users in the form of profit and loss account as well as balance sheet. That is known as what? Financial accounting. So the main purpose of this branch of accounting, that is financial accounting, is to record the business transactions in a systematic manner. So we will record the business transactions in a systematic manner to ascertain the profit and loss of the accounting period by preparing profit and loss account. Of course, we will ascertain the profit and loss by preparing the profit and loss account and present the financial position by preparing the balance sheet. So this branch of accounting provides information required by the management and various others users. So we have already discussed who are the users of accounting information. So it may be internal users or external users. So that is about financial accounting. Next accounting is that cost accounting. Now what do I mean by cost accounting? So the main purpose of cost accounting is to ascertain the cost. So what is the total cost in order to manufacture a particular product? So right from the purchase of raw material till it is been converted into finished goods. Till it has been converted into finished goods. So what is the total cost which is incurred? So it may be all the expenses which is incurred to manufacture a product. So the overall cost which is incurred to manufacture a particular product from the stage of raw material till the stage of finished goods. So in order to ascertain that, we are going to prepare this cost accounting. So the main purpose of cost accounting is to ascertain the total cost and cost per unit. So what is the cost per unit produced and services rendered by the business? It also estimates the cost in advance and helps in management in exercising strict control over the cost. So once we come to know what is the total cost which is incurred in order to manufacture a particular product, then we can make some alterations and modifications in order to reduce the cost of a particular product. So in order to ascertain that, so we are going to prepare this cost accounting. Next is management accounting. Now what is this management accounting? To see through that whether the organization is managed properly or not. So that is known as what? Management accounting. The main purpose of management accounting is to present the accounting information in such a way as to assist that management in planning and controlling the operations of the business. So in order to control as well as in order to help the organization in the process of planning, so this management accounting is being used. So the management accounting uses various techniques and concepts to make the accounting data more useful for the managerial decision making. So in order to make the right decision, so we should have a sufficient knowledge about the management. So it may be planning or it may be organizing, staffing, controlling, coordinating. So all these information should be there in order to make the organization run smoothly. So for this reason, management accounting is being used. So these techniques include ratio analysis, budgetary control, fund flow statement, cash flow statement, etc. In management accounting is ratio analysis, budgetary control, cash flow statement as well as fund flow statement. And the next branch of accounting is tax accounting. So here the word itself says that tax. So the branch of accounting which is used for tax purpose is called as tax accounting. As I've already told you, here the word itself says that tax accounting is nothing but, so it is used for tax purpose, is called as tax accounting. Income tax and sales tax are computed on the basis of this type of accounting. So here the main purpose of this tax accounting is to compute the income tax as well as sales tax of the organization. And the last branch of accounting is social responsibility accounting. Of course, the main aim of the business is to earn profit. At the same time, it should be socially responsible for the society. Of course, all the resources, all the technology will be taken from the society itself, right? So here, the business not being just thinking of earning profit, so it should think that what that has to be given back to the society, because it has taken all the resources, it has taken all the resource from the society, that is environment. At the same time, instead of just focusing in order to earn profit, it should think that what that has to be returned back to the society for using the resources of the society. So that is known as what? Social responsibility of the business. So what do I mean by social responsibility of the business? Instead of thinking just to earn profit, it should think what that has to be given back to the society, because it has taken few of the resources, few of the techniques from the society. So here it is a duty of the business to give something return to the society, that is known as social responsibility of the business. Now let us see what is the social responsibility accounting. The society provides the infrastructure. Of course, the society provides the infrastructure and the facilities without which business cannot operate. Of course, here the business and society are interlinked with each other. Without society, business cannot sustain. These facilities will be given by the society, without which business cannot operate at all. Hence, the business also has a responsibility to the society. So, there is a growing demand for reports on activity which reflects the contribution of the enterprise to the society. So, here what a business can contribute to the society. So, that is known as what? Social responsibility. Social responsibility accounting is a part of identifying, measuring and communicating the contribution of the business to the society. So, what do you mean by social responsibility accounting? They will identify, they will measure and they will communicate what the contribution that has been given to the society by the business. The contribution of the business to the society consists of providing employment to the underprivileged, public programs, environmental contribution, product safety, product durability, that is selling the products at a cheaper rate. So all these comes under social responsibility, that is providing the quality product at a reasonable price, providing employment. So such types of activities are included under social responsibility. So all that will be measured in social responsibility accounting. In social responsibility accounting, techniques have been developed for measuring the cost of these contributions. So here mainly social responsibility accounting mainly focuses on the contribution which is given by the business to society. That we are going to study under social responsibility accounting. Now here also they might ask a question, write any two branches of accounting. So you can write any of the two branches of accounting. So it may be financial accounting, cost accounting, management accounting or tax accounting, and even the social responsibility accounting. So you can write any of the two branches of accounting. Now we shall move on to the next one, that is qualitative characteristics of financial information. Of course, you know how useful the financial information is. So there are number of users, so it may be internal or external users who are eagerly waiting for the accounting information. So the demand is more for this financial information, so that the organization has to see through that quality information is being given to the users. Let us see what are the qualitative characteristics of this accounting information. So if you see the first one, reliability. Now what do you mean by reliability? So reliable means what? Depending, right? So here the accounting information should be in such a way that the user has to depend on that information in order to take the right decision. So what the organization has to do? Organization has to give the quality information to the users which is free from error as well as bias, because it should be reliable where the users of accounting information has to depend on that to take the right decision. That is known as what? Reliability. So reliability means the user must be able to depend upon the information. That is known as what? Reliability. The reliability of accounting information is determined by the degree of correspondence between what the information conveys about the transactions or events that has occurred, measured as well as displayed. So here I have told you, so how it has been displayed to the users, how it has been measured to the users. So it has to be done in a systematic manner so that the quality of information can be maintained. So the quality information is being provided to the users so they can depend on that information in order to take the right decision. So a reliable information should be free from errors. As I've already told you, in order to give the quality information, it should be free from errors, bias, and faithfully represent what is meant to be represent. To ensure reliability, the information disclosed must be creditable, variable, of independent party, use the same method of measuring, and be neutral as well as faithful. So here what you have to remember, reliability is nothing but here the organization have to provide quality information to the users which is free from error as well as bias so that they can depend on that information in order to take the right decisions. Next is the relevance. So the second quality of financial information is relevance. Now what do you mean by relevant? So to be relevant, information must be available in time. For example, an investor needs the information of 2020. So whenever he needs, so at the same time it has to be provided. For example, if he needs the information in 2020, but the organization provides the information in 2021, whether it is of use, no, it is of no use, right? So whenever the users need, so the financial information should be provided in time, that is relevant time. So to be relevant, information must be available in time, must help in prediction as well as feedback, and must influence the decisions of the users. So let us see how this information, accounting information, will help the users if it is provided in time. So first one is helping them to form prediction about the outcomes of past, present or as well as future events. Suppose the information is provided in a required time by the organization to the users, so they can predict the past, present as well as future. So whether they have to invest or not, so what is the current financial position, so everything will be ascertained by the users if it is provided in a relevant period. And the next one is confirming or correcting their past evaluations. So in order to make some changes, so it will help them to confirm as well as correct their past evaluation. So what they have predicted in future, so by providing the information in the sufficient time, so this will make them to change their decisions. So this is about relevance. So relevance is nothing but what? So the accounting information should be made available to the users in time. Next is understandability. Now, what do you mean by understandability? Understandability is nothing but how the accounting information have been presented. So, in the same way, it has to be understood by the users. So, it's nothing but how the information has been conveyed to the users. In the same sense, it has to be understood by the users. Then it is called as what? Understandability. So understandability means decision maker must interpret accounting information in the same sense as it is prepared and conveyed to them. So how it has been prepared in the same sense it has to be conveyed to the users, and the users have to understand that accounting information in the same sense how it is being conveyed. So a message said to be effectively communicated when it is interpreted by the receiver of the message in the same sense in which it has been given by the sender. Accountant should present the comparable information in the most intelligent manner without sacrificing relevance as well as reliability. So relevance, I have already told you, it should be available in time. In the same way, reliability means what? It should be given in such a way that the user have to depend on that information in order to take the right decisions. Next characteristics is comparability. So here the word itself says that comparability, in the sense the accounting information should be in such a way that so it can be compared from one year to another year. So in order to make it easy, so what the organization has to do? The organization has to follow the same method of accounting procedures. So if they make changes, then we cannot compare the accounting information, because the accounting information what they have got will be different from one year to another year. So for such reason, they have to follow the same method. So then only they can compare from one financial accounting year to another financial accounting year. So it is not sufficient that financial information is relevant. That is, it is available in time and reliable. It should be in such a way where the user can depend on that information at a particular time, in particular circumstances, or for a particular reporting entity. But it is equally important that the users of the general purpose financial report are able to compare various aspects of an entity over a different time period with another entity. So here the comparison should be from one entity to another entity, at the same time from one period to another period. So here the organization has to make sure that it has to provide the accounting information in such a way that the accounting information will be compared from one entity to another entity, at the same time from one period to another period. To be comparable, accounting reports belong to a common period and use common unit of measurement and format of reporting. So for that reason, they should use a common method, at the same time common way of reporting or presenting that accounting information, that is comparability. So this is also one of the important qualitative characteristics of accounting information, that is comparability. So in my next session, I am going to discuss few of the basic terms in accounting. Let us see. So since you are going to learn this subject for the first time, so you have to know certain basic terms which are used in accounting. That is, few basic new terms which are used in accounting. Let us discuss in detail about these basic terms which are used in accounting in my next session. My dear students, hope you all understood the session. See you all in my next session with a new topic. Till then, take care. Thank you.